Please have your seat.
Women-owned small and medium-sized enterprises are significant drivers of economic growth and can reduce poverty, yet face a credit gap of almost $290 billion globally. Women in business face greater constraints, including lack of collateral, high funding costs, harmful gender norms, and limited access to business information and networks. Now, we will focus on surmounting barriers that stymie the creation and expansion of women-owned enterprises. We will discuss opportunities to feasibly and practically provide access to finance on a sustainable basis for this important target group. And we will identify scalable solutions for the region and provide guidance to support decision makers in improving the enabling environment. Innovative financing for women. The dialogue for solutions starts now.
Everyone, bonjour. Welcome to St. Lucia. My name is Sunita Daniel. I'm the CEO of Export St. Lucia and the moderator for this process. The theme for this President's Chat is access to finance for women-owned and women-led MSMEs. Women-owned MSMEs are a significant driver of economic growth and can reduce poverty and boost gender equality. However, we know that increasing access to affordable and adequate finance remains a challenge, and women in particular experience those particular barriers. According to the IFC, SMEs face a credit gap of $287 billion globally. This is not only a gap, but also a big business opportunity. This session is going to focus on why it is still the case that women-owned and women-led MSMEs still experience significant barriers to access to finance in comparison to their male counterparts, why we need to close this gender gap, and most importantly, on the solutions, answering questions such as what can policymakers, decision makers in financials and financial service providers, and the women as a target group can do. Our distinguished panelists for this President's Chat are Dr. Hyginus Jean Leon, who is the President of the Caribbean Development Bank. Welcome. Karil Akilian, Director of Marketing and Business Development, Financial Alliance for Women, which is a worldwide alliance of banks providing services to enhance access to finance for women and its members. Welcome. Sandra Riffel-Wallison, Senior Manager Retail, Republic Bank Barbados, representing a private sector bank. Welcome, Sandra. Ashley Oten, Financial Controller, Bahamas Development Bank, Bahamas, representing a financial intermediary bank. Welcome. We will get right into the questions for our panelists. And after that, we'll have a short Q&A where the audience and our virtual audience will follow. And we will have a short wrap-up session following this. So, Dr. Leon, first to you. Why are you interested in this topic, and what are your expectations from this panel?
Thank you very much, Sunita. While it is true that this is about innovative finance for MSME, women-led, women-owned, women-driven enterprises, we cannot ask and answer the question of why is it important to us without, I think, putting this in the broader context of what CDB is about. And at this particular point, we can say our North Star, the driving force, is one of creating an environment to promote what we have been labeling resilient prosperity for all. And so coming out of that, I think there are two pillars that we need to embrace, we need to drive, if we are to see ourselves meeting that goal. And one of those goals is the location of the MSME sector. And so I wanted to start there so you could see why.
Yeah.
And let me probably break this down a little to give context. The first is that we believe development of the region will proceed if and only if we embrace a knowledge creation process. And that knowledge creation process based on evidence is what will drive us to the new nirvana, as it were. And so the reason why I'm raising this now is knowledge creation for us has three components. It has a first accumulation, knowledge accumulation component. Then it has a diagnostic discovery component. And then a transformative strategic component that now builds on the accumulation and the discovery to get you to the types of things you need to do to go forward. So put this in the context of the panel that we have here. I think we want to emphasize that knowledge creation by learning from the distinguished panel. What are the challenges they have overcome? What are the impediments that they still need to overcome? And out of that, I think we can begin to see and chart how can we reposition the bank going forward to be able to advance this bigger, broader development that I'm talking about. So first and foremost, we are interested in learning. We're interested in hearing, listening, assimilating the wide experience of the group that is here. So that's the first. The second component is we are equally seized that you cannot drive development for tomorrow based upon the model of yesterday, which is that governments own, governments lead, and governments are being required to drive development. And so we think it is equally wrong to believe that private sector will do all the things that I said government did. But what we think is the more promising route going forward is one of a new type of partnership. A partnership between the public and the private sector that embraces national development as its outcome, that forges complementarities and synergies across the public and the private sector. And I don't need to tell you the private sector in almost any country that we can think about, 95% of enterprises are MSMEs. And so locate that now again in the experience we have here. If we are going to drive that partnership, we have to be able to locate the 95% of private sector enterprises to be able to forge that new direction that we are talking about. So that gives a location. And the third element I think that drives us is we have been working in that space at the bank, whether it is in the financing space, that we've been trying to invest in particular funds, more recently the Portland Equity, that has a particular eye on gender lens investment. We need to be able to scale that up. And so learning, incorporating the experiences will help us in that direction. We have been in the education space where we've been driving a lot of technical, vocational, educational programs across countries. Where does the experience that the panelists bring fit into that space? Has it been well directed? Could it be done differently, scaled in a different way? We have been looking at developing products and competitiveness issues, whether it's through the CARI Forum, EU Economic Partnership Agreement Standby Facility to improve the means of production and export competitiveness of small enterprises. We have the case of improving rebranding, even the Mayan artisanal work in Belize. We are looking at creating a hub based on the she trades of the International Trade Center in the Caribbean that again would feature and allow for female-led, driven, owned enterprises to enter that space. So you put all of those together, and the work we've been doing in the creative industries, where we have helped a number of small business women, mostly, whether it's in design, in fashion, and so on, that have helped. But all of those, for me, need to be not only scaled, but repositioned. And repositioned in a different way at a higher level if we are to channel our resources to talk about this new development paradigm that we are talking about. So for me, it's the three things. Doing what we have been doing better and at a higher level and scale intensity. The private sector, new private sector partnership. What does that mean? And how can we take it forward? And the third is using and promoting knowledge. Evidence-based as the foundation from which we can grow. And so I look forward this morning to one hearing from our panelists. I promised I would be as quiet as possible. And so let's hear you, let's listen to you, and then hopefully at the end of this we can begin to pull together some of the elements that can help us drive that wider development agenda for the region with a central focus on females, female-owned small enterprises as a means of not the sole, but a dominant contribution to the development effort in question.
Thank you, Dr. Leo, for setting that context and also for being able to articulate how open the CDB is to hearing from everybody here and also from women who their policies directly impact, how it can improve their own lives. So for us to move on, just to have this conversation with Karil, just can you talk to us, given your broad international perspective? This discussion about access to finance for women is not new. So we talk about that very frequently for many years. Why is there still a need for us to focus on access for women, for women-led MSMEs? These women-led MSMEs, they are not homogeneous, and their constraints actually differ from the different growth segments that they experience. Can you elaborate what you have observed concerning these different segments and their needs? So we're talking about very different women who are not homogeneous. Many women sitting here, we're not all homogeneous, very different, but even in their business enterprises, these are different. Can you share your experience with us?
Definitely. So I'm going to break down the answer in two parts. The first I want to tackle on the why the need. So unfortunately, because there is still a very unjustifiable lack of awareness of the business opportunity by financial institution leaders. And this, I mean, global studies have shown that there is a potential 5 to 6 trillion US dollar benefit that we're missing out on if women were to create businesses, new businesses, at the same rate as men. So that's a very big number we're talking about. And then, if you look at it, women today represent 1 in 3 entrepreneurs are actually women. We have around 270 million women that are starting new businesses. This was a 2021 rate. And unfortunately, despite all of these business and economic opportunities that we're talking about that women do represent, they still remain an underserved segment by financial institutions. And IFC in a report highlighted that there is a $1.9 trillion credit gap of unmet credit needs by women in formal business. Informal, this is the formal. We're not even moving into the informal. And this was a number that was done right before the pandemic. So you don't want to imagine the situation today, post-pandemic, what it would be. And so knowing all of this, I think it's undeniable that there still needs to be a lot that needs to be done. And it needs to be done at three different levels. It needs to be done at a policy level, and it needs to be done at a private sector level, and then it needs to be done on a more, end user level. And we'll get to that a bit later. Now, talking about segmentation. So what we see is that in general, a lot of services being provided normally under the scope of microfunding, and with women more being seen as the micro-entrepreneurs. Now, the micro-entrepreneurs are, let's say, from a segment perspective, divided into two sub-segments. So the first would be your low-income individual micro-entrepreneur. So she's a single business owner, she works from her house, just makes enough, usually is handling all of the money and the finances in cash, and lending for these types of women, what we've seen is it's mostly done from a group lending perspective, and whereby they use the social capital as a guarantee to the lending. Now, when you move a bit higher up, so you have the growth women entrepreneurs, and so these have a bit more of the business scale. They make more money, enough to cover the household expenses and then the business expenses. And so what we see here, we're more of the products are more in the cash flow financing perspective. And so for cash flow means that the owner, the person who's handling the lending is also very understanding of the situation and also does the balance sheets and the income statements for these women. And then you move to the next segment, which is the SME segment. So here, the businesses are now formal, and this is when the banks jump into the lending space. And they usually do so through their regular SME banking services and products. And unfortunately, there's a very big segment that's stuck between these segments that's not really addressed, and that's the missing middle. So these are women that are above the stage of micro-entrepreneurs, but maybe informal or maybe formal, but they're big enough, they're too big for microfunding, but too small for small business lending. And this is called the VSE, so the very small enterprises. And unfortunately, this is where most of the women are. And this is a missing middle that's not being financed, and this is where we have a gap of how it should be served.
Okay, thank you so much for this introduction, because I'm now going to go on to the favorite people that everyone blames for the issues that we have for women businesses, which are the banks. And so people commonly say the financing is not available, and there's so much financing available everywhere else, but we're not able to get that financing. So Ashley, can you speak to us about those growth segments that Carol has spoken about? You serve a lower growth segment of women MSMEs, and as an intermediary bank, what are the entry points for financial services providers to improve access to finance for women-owned or led MSMEs? And while you're having that discussion, can we also talk about the financial products that have been successful in your experience? What have been those financial products? Why have they been successful? Okay. And also, if you can just go through a bit about what's the uptake of those financial products? Are those women who we are talking about who have not been able to access that funding that Carol has spoken about, have they been able to get the access to those financial products? And has there been a movement in your experience at all, any significant movement away from credit to other forms of non-traditional financial instruments? So yes. I know I'm asking you a lot, and I know that the audience is very interested in what the banks have to offer and have to give. So thank you.
So the primary issue that we face at the banks when persons walk through the doors is meeting the collateral requirements. And so at the Bahamas Development Bank, the collateral requirement for a loan is 100%. And so it's extremely high. So imagine that you want a $30,000 or $40,000 loan, you must meet that 100%. It's very high. And in our business, $30,000 is a small loan, right? And we've noticed that a lot of women are not title owners because of historical legislation in the country where it was the oldest son automatically inherited his father's property or the property once their parents passed along. And so we were faced with that. So how do we come up with alternative collateral options, right? Or alternative ways of building credit for you to be able to qualify, or alternative persons to guarantee this loan with you. And so we're still going through the process of determining how do we value things like intellectual property. To this day, we cannot put our hand on something like what is the value of a patent or copyright or something of that nature. But these things have value, and a lot of persons can bring these things to the table. One of the incentives that we enabled for our family of islands, which are not the mainland, New Providence and the Bahamas, is the collateral requirements were reduced. So they were reduced down to, it may not be much, but down to 80%, right? Another option is to allow somebody else to come in with you on the loan. And so those are things that we're working through to determine what other collateral options are there. We may be able to use movable assets as opposed to land. You may have a fleet of vehicles, you may have other options that we can use rather than having just title and land. One of the other hurdles that persons have to cross is the policies or the non-discriminatory and fair practices, right? So, on the application you ask, are you single? Are you married? How many dependents do you have? There's this automatic, idea that if you're married, you automatically have some level of stability, right? And so we have to move those sorts of non-discriminatory, we have to move those sorts of policies to make sure that it doesn't matter whether you're single with kids or married with kids. Another spot that we need to improve on, another entry point, is technical assistance for women. And one of our family of islands, we have cascarilla bark, right? Cascarilla bark is used to make Campari. We have that in mass quantities down in one of our islands in Auckland. Also, when they beat the bark, it produces an oil. The oil is valued at $1,200 an ounce. It's used to make perfumes. And so they have this rich resource down there, but they are manufacturing it. But how do you turn it into something that's a valuable product? How do you export it? And how do you account for it? How do you track it? You know what I mean? So how do you export it to make sure that it meets all of the necessary export requirements? And so this is another issue that we face, where you have this resource, but you don't know quite how to turn it into something of a valuable product and make it to the point where the bank would say we're willing to risk putting our finances into this. Another issue that we face is we simply do not have the data to determine what is a perfect product for a woman, right? Or for women-led businesses. We know it's a female, they have 2 kids, but beyond that, or you're married, single, but what is the exact product that we need for that particular island or that particular region or that particular demographic that will meet the needs of that particular area? And then, of course, you fall into the psychological element of it as well, where you need childcare and all these other supporting or systems to get women to be successful in businesses. And so that is where we are at in terms of the bank, the difficulties that we face. Also, I was speaking at dinner last night and advising that we have like 700 islands and keys, right? Some of them inhabited, some not. And the problem is our banking system. We don't have banks down in the other islands. And so the need for just simple banking is not there. How do you get your payments where they need to go once you have established these loans? And so we don't want women to be able to qualify for the loans, get the loans, and then they fall into non-payables, right? And then they basically mess up their credit. And so then that becomes an issue as well.
So in terms of the financial products so far that have worked in your experience, what would you say would be the best ones so far that have worked and we could probably look at across the region that could potentially work for our islands also?
Right. So we have had one specific product that was just for women. It was in collaboration with the U.S. Embassy. It was for a program called Academy of Women Entrepreneurs. So they went through this technical program where they learned to be entrepreneurs. The problem is when they came to the bank, actually out of that product, one person was successful.
Oh, wow.
One person. And so what we realized is even though they were great entrepreneurs, the problem was they needed soft cost support. So not necessarily a product support. They needed support for legal work. They needed support for architectural work, all those other soft costs that we could not provide that product for. It was definitely a learning experience because we did not realize that was what the demand would have been, as opposed to providing money for a product or service. Right?
That's a very good point because it leads to the ecosystem that has to work together for women to really gain from what the banks have to offer. And so it was interesting to hear about your uptake, the uptake of that. Would you say that would be one person applied, or was it a larger group?
No, actually it was the cost that was allocated to that was $250,000 to spread amongst, I guess, 10 or 15 women. And only one person was able to benefit from that, unfortunately.
Wow.
And so those funds are essentially still sitting there, waiting to be utilized. And that's very unfortunate. It was a learning experience. We learned from it. But we have learned that there must be some alternative means of sourcing funding. And so not only loans or credit, but we can also tie it with grants. So there could be a grant portion. We've also discussed to having an equity portion. So the bank would buy into a portion of your business. Once you have been successful, we push you along and say, we're buying out, you could go along your way now. And so that's also a product that we can offer, basically a 3-in-1 combination of any three of those to get businesses along the way. Yeah.
What would you recommend for our policymakers who are sitting here in the audience and looking at us virtually? What would be your recommendation to them? What would be the main takeaway in terms of handling that issue?
First of all, there must be some sort of gender policy or gender national strategy. And so I think the policymakers need to be clear and explicit on what it is that they want to achieve. I know based on my experience, we put policies in place and we don't necessarily follow them or the legislation in place. Or it's in place and we do not inform the populace of what is in these policies and these legislation, so people do not really know the benefits that they have or the way they can take advantage of certain systems. And so my recommendation to the policymakers would be have clear, precise, explicit policies, have a national inclusion strategy that people are basically aware of, like conferences, etc., of this nature, to make sure that people are aware that it exists.
Thank you so much for this, and I will move on to our next panelist. The real banks that we see every day on our street. And so, Sandra, you represent Republic Bank. Can you just talk to us a bit about serving a higher growth segment of women, MSMEs? What advice would you give to women who are applying for loans in your institution?
Okay, thank you, and good morning to everybody. I'll start off by saying that there is some hesitancy from women for the reasons that we would have all mentioned previously in applying for facilities. We offer a range of facilities at the bank, but you'll find that more men do come forward in the corporate sector as opposed to women. So what I would say, we do have a product for women, and I'm going to get into that a little bit later, but let me just first start about what I would advise you to do if you want to apply. So to start off, we have to have some kind of gauge and some way to measure and a starting point and a range. So what we would advise is, one, for women, that you are a female entrepreneur. So that would be the first thing. We would also advise that you have to at least own 50% of your business. 50% own or manage. Either way, that will also start the qualification process. And we would also want you to be in that position for at least 2 years. So we felt that 2 years was enough time to have history of the organization to at least give us enough to assess so that we can make an informed decision. And then there's an online application form. And this specific product to which I'm referring is something called the Entrepreneurial Business Builder Program, which I'll speak about afterwards. But at the end of the day, we want to encourage women in this segment to apply. Far too often, ladies sit there and they say, I don't think I'm going to manage, I don't think I'm going to get through, this is not going to work out for me. Because we talk about there being a stigma and women being marginalized, but women marginalize themselves because we don't think that we can do it either. We don't think we're going to be successful, but we actually can be. So the other thing, which is critical, is that to avail of this particular product, you would need to be living in one of our 12 regions. Just to name a few: St. Lucia, right here where we are, Barbados, St. Vincent and the Grenadines, you have Suriname, Guyana, and the list can go on, up to the 12 regions. We are not currently focusing on our area in Ghana because we do have an international bank. We do have a bank in Ghana, which we would have taken over a few years ago. But for now, we're focusing on the Caribbean. And then there's an online form that we would ask you to complete in its entirety. And we can speak about that if we need to at another point. But the idea is, what we find is people do complete the forms, but they don't disclose all the information. And this can tend to delay the process. And if we don't have all the information, we can't help you. So we need you to help us help you. So that's what I would advise if you're going to be applying for a loan with us.
Thank you. I'm sure people are taking notes on that. But if you could also speak to us a bit about how, as a private sector bank, has Republic Bank really supported women in applying for their loans with regards to financial and non-financial products? And I'll just ask a follow-up question. Why is the support to women so important to Republic Bank? And I'm sure it would be very important for our audience to also hear about this. And can you speak to us about the sustainability and impact of women as clients of the Republic Bank?
Sure. So let's start with the product specific that we have, which I mentioned just a little bit. We call it EBB, as the Entrepreneurial Business Builder Program. And this is a program that we would have developed in August 2021. And it's specifically geared for women. And we actually are doing this product in partnership with the Business People Development Associates. And partnerships are awesome, because you get to leverage off of each other. And in this instance, it has worked very well. So the EBB program actually focuses on improving the technical skills for women so that they can have sustainable and profitable businesses going forward. And what I love about this program is it's not a situation where we just lend you the money and say, okay, we've lent you the money, be on your merry way. It's a situation where we have a phase 1 and a phase 2. So for example, in phase 1, there are 21 modules an online learning platform that you're encouraged, and you have to if you're going to complete the process. You have to complete these modules, and we don't just leave you to complete it on your own. You're given, a manager, an account manager, who's going to guide you through it. You're going to have some in-person, some online sessions, face-to-face. So at the end of the day, we're grooming you and ensuring that whilst we're giving you the money in one hand and lending you in one hand, that you know responsibly how to use that and become the best CEO there is in your organization for that sustainability. But why did you do it? You would ask, what led us to it. So Republic Bank is very keen on giving back to communities. It's something that is very dear to our heart and something that we do, every day. And we have a program called The Power to Make a Difference. And this, otherwise known as PMAD. And I'm looking at somebody in the audience who didn't quite know what I was talking about the other day, and that was another joke. But our Power to Make a Difference program actually is the genesis for how this EBB program came about. Now, originally, the Power to Make a Difference program really was just for charity. But we felt, looking around, and throughout the Caribbean, we recognize that we have a lot of women who are awesome entrepreneurs. And if they are given that extra assistance and the guidance that we're offering through this program, they can be awesome and help improve the economic stability of not just Barbados, where I am, but throughout the Caribbean. We would have mentioned already about the untapped funds that we can realize. So we felt, why not expand this particular program to women? We have to have a starting point. And so our focus then became, let's look at this. We also recognize that women are very resilient and they're very committed. And even though some of the times, I mean, you only have to see it in your homes. I think, Ashley, you mentioned it. You know, you're at home, you're managing a household, and that in itself is a very difficult, and if you had to be paid for that, you probably will be a millionaire by now. But at the end of the day, we have to be able to assist each other. And the third reason why we thought it was important is when you look at the ratio of men to women, or women to men, and you realize how many female entrepreneurs there are, we realize that, you know, we're still at a very low scale, even though we don't in the Caribbean necessarily recognize or see a lot of the marginalization that you may see internationally in some other areas and in the parts of the world. We still felt that it's something that we need to zone in on. So those are the reasons why. And so I'll just end there for now.
Yes, Dr. Leo, go ahead.
Thank you, Sanita. I just wanted to add a provocative element to this. We've heard maybe 2 points from our 3 panelists, all of which point to one thing: the presence of incomplete markets. Incomplete of the middle,
yes,
that cannot find finance. Incomplete from title registration. Incomplete from the need for collateral that is not there. Incomplete from uptake. And I think we need to ask ourselves the following: are we using appropriate measures of risk for development? For development. This is what we are saying we are about, for development. If we are going to develop and we need to build that body of MSMEs, one, and I would not even say just female, let's use inclusion, an inclusion policy across the board, because today it may be females, tomorrow it may be something else, but inclusion policy. And then you now say, how do we conceptualize, measure, and implement development risk? I don't think we are using the concept of development risk, because if we were, there's no reason why we should need 100% collateral.
That's a very good point.
Could not.
That's a very good point.
If we were, there is no reason why an RB Republic would now be saying that the risk is too high to invest. If we were, there is no reason why our people should be afraid of wanting to make a move, because they are reacting to the assessment of that risk. At what point do we ask ourselves, when do we switch from nominal return, market risk, to development risk and social return? That is the essence we need to address. If we can't do that, next 20 years we'll be having that same conversation, because the markets will not open, the completeness will not occur. And we can come up with as many instruments, unless we take this as a whole society approach. The legislation, the acceptance, the promotion of self and self-worth, changing the measure of what we are thinking about, how do we tackle development for the whole, we are not going to get there. So I want to come back to the panelists and really say, how do you see your role in beginning to change that narrative of development risk?
And that's a very good question that I would also like to add on before Dr. Leo came on, is given our own experience as working with a lot of women and women-owned MSMEs. A lot of times they come to us and they say, I would like to do this, and I've done all the research I know what I want to do, but the bank is asking me for land that I don't have, or they're asking me to mortgage a house that I don't have. And so how do we really push that growth agenda, that development agenda for women? What can the banks do? What can the alliance do? So,
and I want to challenge it one step further. if I may, because I think from a developmental perspective, there's a lot that can be done, and you can take business decisions on how to handle risk. But there are actually, if you really study your numbers, there are actually not as high a risk as the institutions today imagine. And this is where the challenge is. The first requirement for all of this is gender data. Do we have gender data? Are we collecting the data? Are we analyzing the data? And are we looking at what the potential is out there? Today, from an alliance perspective, what I can say is we have 90 plus members across the world. And unanimously, all of our network members will guarantee you that women have lower non-performing loans across the board.
But yet have higher requirements.
Therefore, less risky. And they would also guarantee you that they have a higher net promoter score, which means that they will promote your institution a lot more than men will. That they also have either equal or even better products per customer rate. That means that they are better clients for you because they have more wallet share from your institution. And then on top of that, they also have a higher lifetime value. So knowing all of this and seeing all of this, why are we seeing a risk?
Yeah.
This is where the challenge is. Yeah. If you really have the data, you look at your internal data and you look at your market data, you'll see that the risk is not as high as you perceive it to be. So one, there's a lot that needs to be done from an institutional perspective, from a vision perspective, in really starting to look into that data.
Yeah.
And then second, most of the reasons women are penalized today, if you look at it, they're penalized for excuses and reasons that are things that they cannot control. So collateral demand, thank you so much. Sorry, well, it's a very warm welcome. That's all I can say. So they are today being penalized for things that are not justifiable. Today we ask for collateral, great, we understand that there's a risk, but if you know all that you know, if you really look at your numbers, and if you see that women are not as high a risk, or a certain segment is not that high a risk, just to generalize it a bit more, because it's not only about women, it's really about understanding your client and your segments. So if you really understand and you see where the risk is and where the risk is not, then you structure your programs accordingly. But if you also come and say, okay, I'm asking for documentation, and we know that maybe not here or maybe here as well, a lot of the times women lack a lot of documentation. In some parts in Africa, they don't even have a national ID, and so how can they be traceable? And that's what you need, biometric, digital transformation that helps create that opportunity.
Karen, let Sandra come in here.
Yes,
a bit. Yes.
So if I may, and I'm glad that both of you brought up the whole topic. And yes, I mean, at the end of the day, collateral is important because we do want to make sure that we have a well-secured product. However, with this new product that we have, we recognize that there's going to be some level of delinquency, and we have opted to do it on an unsecured basis. Basically, because to your point, President, we recognize that we have to at some point be able to release some of those constraints in order to let in people who otherwise wouldn't normally be able to qualify for a loan. I mean, so that's why this product is so amazing. But our security doesn't necessarily come in collateral. It comes in the education and your development, thereby giving you responsible business banking, so that you can manage your affairs going forward, and thereby making it a little bit easier and more, I guess, assured that you're going to meet your monthly commitments going forward. So that's where we're seeing it from that level. It's not perfect, and it is a work in progress. We're only on our second cohort, so it's very new. But the good thing about it is that's what it's about. You try different things, and you learn from the past. And if you recognize that this worked, you take that forward, and what else you can do differently, you say, okay, well, let's do that. So it evolves over time, and that's exactly what we need to do. I would also like to add that one bank can't do it by itself. I mean, far too often, we're competing against each other, but at the end of the day, we're still fighting for the same cause. So we can't be against each other with certain things. You know, we have to all agree as a nation, locally, regionally, and internationally, that this is what we want to do, and this is how we're going to go about it.
That these are actually national goals.
Yeah.
Yes.
The cake will be bigger, and then everyone will be happier at the end of the day if all of them work collectively.
I mean, it's actually a moment just before.
May I just add just one point? Because I just want to add about alternative data sources. Because today, the way we credit score files and the way we look at reviewing credit files is still very traditional. I think what we need to understand is with digitization and the income of the fintech ecosystem today collaborating within the financial ecosystem, you have a lot of these tech-based companies that bring in the differentiated credit scoring mechanisms that I think need to now be involved, because who said that only the way we used to do the credit scoring is the only right way of looking at it? You know, there are many other factors, if you really look at, that are give you the credential of women or men being good payers. That are not
just one quick bit to that. I think, Sandra, you make a very important point. And when I talk about development risk, adopting development risk, it's a new concept. And it is more aligned to what you are beginning to do. And I'd like to encourage that, because when we look at market risk is an ex-ante assessment that defines the price in which you contract your borrowing, and you're fixed. It does not take into account the potential for development. And so the product you're referring to, where you bundle, whether it is training or better business practices, implicitly is saying you are proactively managing risk going forward in the future. And hopefully you would have priced that future risk into your price today, whereby whether it's a reduction in collateral or reduction in your security general, such that the thing becomes more affordable. And based on evidence, again, that's important, you can get to a stronger credit assessment. And so I make the point of development risk to say that it is an evolving, risk mitigating positioning for the future pricing that needs to be brought forward at the point today when you are making the particular decision. And so we have to embrace that. So I like the idea you have started, but I think it needs to be developed and opened even.
And I think in the spirit of where we are, the Nobel laureate, Sir Arthur Lewis, we probably have a Nobel laureate idea just coming out here from Dr. Leo. Ashley, you serve so many islands. Can you also give us your perspective on what we're discussing here?
With regards to risk-based pricing, when we lend, our, interest rates are fixed by the Bahamas government. They are fixed. So it doesn't matter if you come in for $200,000 or you come in for $5,000, it is fixed at a certain rate. And so the challenge that we face is, it's not an astronomical rate. It's 6.75%. The challenge that we face is that we are intermediaries, so we have to get our funding from somewhere else. So the spread in between there is very thin if we borrow from the CDB at 5%. And so you see the issue that we face. So we have to make sure that we are secured in our lending, so we make sure that should this loan flop, that we are able to secure our funds so we can pay the CDB back. And so this is the conversation that we need to have with the Bahamas government, is to move that fixed rate and now do a risk-based pricing, because we are at that point where we can't borrow from the CDB at 5% and expect to make a return on it. And so that's the major issue that we face. And this is throughout all of the islands. It's that rate, that's what it is. And that's what we face.
And I think it's a wonderful thing that the president of the CDB is here.
Yes.
So that says that, the conversation is right there. Yes.
But he's aware.
It's a good point to elaborate on, all of the tools that we are using are antiquated, not fit for purpose. And we cannot continue burying our heads in the sand and saying what we did yesterday we need to continue to do. That is not development.
Yes.
It is not development. So whether it is starting at the CDB, or in the government, we have to embrace a new vision, a new tomorrow. Because we can forget advancing development if we are not prepared to do that. And so, likewise, you mentioned interest rate policy. It is fixed. We have an interest rate policy that I can say we are now looking at assessing at the bank. That would be wide enough to take into account some development aspects, some risk aspects. We are even looking at our instruments. Should we be embedding in those instruments a lot more contingency type clauses and analysis, not just the debt contingency, but contingency clauses, full stop. How do we embrace the idea that venture capitalists out there can continue to make profit because 5 out of every 100 projects are successful, meaning 95 fail, but yet we use as a measure for our people it must be 100% success rate. How comes they can make money and we cannot? You know, we just need to step back and let's accept we've done as well as we knew how to. We've done as well as we could. But that as well is not going to be good enough for tomorrow. So we need to stop and take stock.
Thank you, Dr. Leo. And Sandra, Dr. Leo has just really spoken about CDB's position and them looking at themselves. And so what advice as a private sector bank would you give a multilateral bank like CDB that could enhance access of finance to women? What would you give, tell Dr. Leo, who's sitting right here with us?
So actually, I think we've been skirting about around it all morning. But at the end of the day, I mean, you certainly have started off very well because we're here. And this is the step in the right direction in gathering like-minded persons and people in a room and talking about what we need to do. So I think that's step number one. I think also that a lot more partnerships can be made going forward. I spoke a little earlier about, the Republic Bank doing it, maybe another bank might not be doing it. And it would be nice, and I'm going to throw it out there. We would love to have a partnership with CDB to help.
We'll come to you tomorrow.
We'll come to us tomorrow. Great. I mean, we would love to have this to help propel our program. And I wouldn't be selfish and say just Republic Bank, because at the end of the day, it is not a Republic Bank challenge. It is a world challenge. Yeah. So we would, however, want to start with Republic Bank, and then and branch out from there. So certainly.
Okay.
Yeah.
Very quickly, Ashley. Yes.
I would like to take this opportunity to extend my sincere thank you to the CDB, because they were responsible for the Bahamas Development Bank doing a complete diagnostic review in the past 2 years, where we developed a brand new strategic plan on determining what were the gaps that we needed to meet. And we are fully aware of what it is that we needed to meet. We got a company that came down to us from Canada, and they basically took everything apart and put it back together again. And I want to say thank you to the CDB for funding that. And so now we know what it is that we need to do going forward. We have had the discussions with the CDB on a consistent basis on where the Bahamas Development Bank needs to go. And so we're thankful for the CDB holding our hand along the way on a consistent basis. Yeah.
Thank you for that. And Karil, from your wider and outer regional perspective, what would be your recommendation to the CDB?
I have a few.
Don't overwhelm Dr. Leo.
But there's
very quickly.
There's a preamble, which is one that the CDB in its entirety needs to be fully aligned internally. So whether it's capacity building of the full scale for the employees and everyone, so that they have all the same vision that you have today for CDB moving forward. So that internal alignment is, I think, very critical. Then moving forward, what you can do what should be done is doing an analysis. So data, all the countries and the regions that you cover, you need to have a full understanding of the pain points of women entrepreneurs today in those regions, in accessing finance, and their behaviors with money and finance today, in order to be able to understand what is the kind of program that you need to put forward. And then is to kind of create incentive and maybe a supporting environment for financial institutions to create intentional programs for women. So putting that out there in a way, pushing them to do that. And you can do that by creating risk-sharing facilities or concessional interest rates, things that can incentivize them to really take that first step. And then next would be making sure that there is measurement. So measuring, making sure that the institutions that you're supporting are reporting the success and the impact of that, so that you are able to have a clear understanding of what would be the next step moving forward. And then fourth, I'm just going to throw it in there, maybe partner with people like us, the Alliance, who have been doing this and who are doing this globally with all this, and creating that a larger network for all of your members as well, and your
let me have a quick rejoin.
Let me try to be a great moderator here. I'm already seeing signs all over the place.
No,
so I'm going to
just a quick response here, because I think the points Carol make are not only important, but they mirror everything we are doing now. One is we spent the entire first year of my presidency promoting the simple concept, measure better to target better. The only way you could target is if you have a better measure. Exactly. And that measure can only come through if we engineer and promote what at the bank we are calling a knowledge management initiative, which would in principle be a network of networks of all knowledge needed for appropriate decision making, including a particular page. I don't see my gender person here, not Maria. It is, no, I know, not you. Somebody else at the bank had brought up the idea of a gender portal that would have data from various agencies, including yours, and other people to be able now to build a gender database accumulation that could be discovery, that could lead to better strategies. So we are on that page. The partnership is something we embrace. In fact, it is the second pillar of our cross-cutting elements, to have a holistic development approach based on knowledge creation and partnerships. And the partnerships we have already, I can equally tell you, started speaking with Republic. And that is to say that we need a financing ecosystem that will not only develop markets, develop instruments for purpose, and be based on a regulatory and market infrastructure that can promote that ecosystem going forward. And it cannot be done by CDB on its own. It has to have commercial banks, it has to have asset managers, has to bring in the central banks, and it has to have the broader international architecture in there to make it work. So I'm glad you bring in those. They are not 4 asks, they are 4 things you should continue.
It's very good.
Thank you.
Thank you. I also want to, the importance of speaking to our bankers associations, and I know, Ashley, you probably have something that you wanted to add to this conversation here.
Well, when we were discussing the data, the importance of having the data, one of the elements with regards in the Bahamas, because we are a government, the Bank of the Bahamas government, right? So not always that we would get our funding directly from the CDB. It would come through the Bahamas government. And so I would like to see or recommend for the CDB to require the Bahamas government to have the same reporting requirements that we have. You know what I mean? Because they need to as well be able to have the data to know that we need to pump sufficient money into the Bahamas Development Bank because we need to develop, and not necessarily the commercial banks, which in the Bahamas is the Canadian banks, right? And so we have the development bank that we have spoken in here about small loans, MSMEs, but the development bank basically can do huge loans, land infrastructure, bridge financing, equity financing. And so I just wanted to make sure that while we are, and those can be women-led. So we don't necessarily need to just discuss women from an MSME point of view, but also from women putting in infrastructure, women doing bridge financing. And so I don't think the governments, all of them, may not have that data to know that you have women who are in these businesses who also need the financing. So not just $15,000 loans, $20,000 loans.
Thank you so much, Ashley. And I know you've heard a lot from us, and we've had quite a very engaging discussion. I'd like to go to the audience now, and we'll also take some questions from our virtual audience. And I know that when we talk about money, we all get very excited. So I'd like to just give us a few rules while we have that discussion for the audience. So if you have a question, you raise your hand. We have somebody with a microphone around. Please don't ask the question or start speaking until the microphone gets to you. If you have a question for a particular member of the panel, then you state the person's name who you'd like to answer your question. Then you ask the question as briefly as possible, because we'd like to get as many questions as possible. And then you give me 2 sentences, very brief sentences, setting the context, really explaining what you mean by your question. So let's be fair and let's see if we can get as many questions as possible. So our first question. Oh, no, we're not excited about financing.
We did a good job.
So we have a question. The front.
Hello, good afternoon. My question is to Sandra. So the education that you're doing with your entrepreneur partnership, I was wondering about your success of like the adoption of the classes, because my organization, we've done various classes, but what we recognized was there's sometimes a gap between sort of base education for the person who's doing the program and getting them up to the level where they could understand the material, like if you are doing more advanced budgeting or entrepreneurship. So how have you met sort of that gap between basic education to then being able to successfully do a entrepreneurship program?
All right, thank you. That was a wonderful question. So I'll just start off by saying that for our first cohort, actually, it was very successful, which spurred the reason for the second one. We actually had 18 graduates, and they all completed the program. I mean, the good thing about it is they may not always be able to follow every little thing, but we found that the success rate for the first program was quite significant in terms of bridging that gap, because you're quite right. We have people coming in. I mean, at the end of the day, the criteria that we set initially, you have to be at a certain standard, because we do have to have something to work with based on this program that we have. So that's why we had a requirement of 2 years in the business. And even though you may not necessarily have had formal education in that particular realm, you do have a transferable skill that will allow you to have the staying power to be able to focus on something. So we haven't found that that's been a significant challenge at this point in time. But what we have seen is that not everybody finishes the program. So there is that gap there, and I think that we have to continue working to see how we can close that. The company that we're working with, which is why we chose them, because we recognize that as a bank, we're financiers, we can provide financial guidance, but I think to answer your question more and solidify the response is the organization we're working for, they have those skills. They're the ones who are actually able to provide the guidance, the raw talent, the raw management skills, the CEO skills, etc. We come in then providing the financial guidance and how that fits into everything else. But as expected, there is some churn, and we don't have 100% completion. I hope that answered your question.
It does.
Good, thanks.
Thank you. Go ahead, Dr.
I have a rider here. There's the issue first of basic education, and then the issue of the gap between basic education and what is needed to succeed in business. And I wonder whether we should not be putting this fair and square into where we have at the moment a missing gap. Our learning education system is not geared to building a nation of entrepreneurs. It is not. Why can't we, and I'm glad Minister you're here, why can't we be asking of our governments? We can do something very simple. In the same way you have language, English, math, science, across the curriculum from kindergarten to graduation, why can't we have a simple line which says, we want to be a nation of talented, innovative entrepreneurs that can create opportunities for tomorrow? And if that's the goal, let's make one course across the entire curriculum from kindergarten on that everyone takes as a matter of course, and therefore by the time you leave school, forget about graduation, by the time you leave school at any point in time, early or on time, you have at least that basic knowledge of business and how you go about business already built into your normal way of thinking. That helps reset. Now we can talk genuinely about the gaps, because those gaps are evolving, because business culture, opportunities are changing all the time. So your gaps will always be there, but they can be targeted to meeting tomorrow's need. But we should always make sure we have a minimum, and it can be done very simply through our education policy.
Yes. Very good point. Very good point, Dr. Leo. Any other questions from the audience? We have a question here.
Hello, good morning. I'm Safia. I first of all want to thank you guys for this refreshing panel. It's been a while since I've heard very open ideas, so we're looking forward to development. The first question here is, how can we sensitize male decision makers to the issues affecting women in business? And I'd like to add, and to encourage them to action the ideas for change sooner rather than the long time it usually takes for laws or policies to be in place. And I have a second question. Advice maybe for somebody or women who have all of those things in place, including collateral, but still cannot get financing. Maybe can you advise on where else we can turn to get some money to grow our countries and our region? Thank you.
Okay, Sandra, that looks like a question right up your alley.
Yeah, so I'm not sure if anyone's hearing me. Okay, so I'll take the second question. And I just want to reiterate it just to make sure that I've understood you clearly. You're asking, you have all the collateral, you have everything that we've spoken about, and you're still finding it difficult. So I don't have the full picture to be able to say what the reason, what the issue may be. But I will just quickly go through a few things. So when we're looking at lending, we look at a number of things. We look at your character, we look at the collateral, yes. We look at, your business itself, the model itself. So if you have everything else, what type of business is it? Is it a business that the bank might see is sustainable? What is the competition like out there? Are there 20 others? Are there 20 of the same thing? Is it likely that you're going to be able to succeed in the long term? Is it sustainable? So all these things are factors that we also consider. So whilst you might have the collateral and you might have the business right there and then and everything else, we also take it a step further and look at the longevity of the organization, because the loan if it's a larger loan, for example, it could be up to 15, 20 years maybe in some cases. So the question is, can we see that organization growing from strength to strength and being able to sustain those monthly payments on the long term? So that might be something that they might be thinking about. I'm not sure what business you're in, and you may not want to disclose that here in this environment, but I'll be happy to chat with you after, and we can go into that. So, and then we also look at your credit score. So, and I know that credit scores, I mean, it's a guide. At the end of the day, you know, if I said to Ashley, Ashley said, Sandra, I want to borrow $50,000, and I'm not just going to be sure because I like her. I'm going to want to make sure that, you know, how is Ashley going to repay me? What type of business is she in? Is Ashley knowledgeable in the area that she's in? I mean, we have many people who approach us for facilities, and they say, okay, I want to start this XYZ business, but they don't have any knowledge in the area. Are you going to hire somebody? You know, so there's so much more that goes into it other than just the collateral and that. So it's a little bit more involved, and I would be happy to take it offline afterwards. So that's that question.
You've answered, yes.
After that. So that's from basically coming into the industry perspective. Yeah. But we've also noticed that a lot of women have businesses that they're running informally, and then they get to the point where they want to expand, and then they need the funding to expand. The issue that we have noticed over time is that we tend to be so busy in running the business that we forget that there are other elements that have to happen as well. You have to have proper financial statements. You have to make sure that you're abiding by whatever regulations you have for your country. Do you have a proper business license? Do you have proper licenses for whatever the business is? So if you're running let's say a rental car business, do you have the necessary permits, etc., from the transportation? And so we have noticed that you run in these businesses, but the requirements that are essentially needed underneath are missed. And it's not realized until you now want to come and get financing, and then we're like, so when last did you prepare financial statements? And you haven't prepared financial statements in 2 to 3 years. So you actually have no idea where you are. And we have where persons, they would print off their bank statements and be like, this is what I have. Mm-hmm. But that's really not the same as a set of financial statements. We don't necessarily require the financial statements to be audited, because you're not at that point yet. But they need to be properly compiled so we can begin to do our ratio analysis. Do you have enough capital adequacy? Your profit margins? What's the history like for the past 2 to 3 years? And you'll be surprised to know how many people simply cannot produce that.
Okay, thank you, Ashley. Thank you, Sandra.
The first part?
The first part, yes.
The part everyone is avoiding. Yes. So I think, as amazing as Dr. Leon is as a true visionary and believer of financial, economic, and social development, most financial institution leaders are all about the bottom line, right? Mm-hmm. And it has to make business sense for them. But the reality of it and the beauty of it is a business case. There is a clear business case. And it is, if you look at your data and you look internally, and these people really see, the facts don't lie, right? So if you see that women are great clients because they have lower NPLs and they are better clients, they take more products. And so from a profitability perspective, they are a very profitable segment. So then if you look at it from a pure business perspective and you present it as such, then you'll be able to really make that change start to happen. But it is all about showing the facts and bringing the proof that this is there. It is a clear business, decision that needs to be taken. And you have 50% of all your population, wherever you are in the world, who are women. So at the end of the day, if you, in your target marketing, within your institution, only 20% of your clients are women, but those 20% are really, from a client perspective, are more profitable for you, and you have a potential to reach 50%, tap into that 50%, then you're missing out on a huge business opportunity. So it's there. Mm-hmm. All that needs to be done is to have one person who's going to do the math and the analysis and bring it to their attention that this is here and it's a great opportunity and it's being missed. And so that's where MDBs have a great role to play with pushing regulators within the countries that they work with, to kind of create that awareness building, and then for the regulators to start creating that. And once the regulator, waves his little, baton, then all the banks will naturally follow because they're all scared.
Thank you, Dr. Leo.
I have to make 2 points. The first is, there is nothing wrong with conflating development and private sector profits. It's one of those myths that exist. We cannot say to the private sector, we want you to be with us, but guess what? You need to get rid of your desire to make profits. Money. No, that is not the argument. That is not the argument. So what we are arguing for is you need a new type of partnership. The partnership is a partnership for prosperity and profits. Now, where does the prosperity come in? It bridges profits of today with profits in the long run. There is no business out there, and I have not done a full survey, but there's no business out there that will opt for profits today if they know that there is no prosperity to support their future in tomorrow. So that very notion of they want to make profits, if they are given a choice, profits today for 5 years or profits for the next 100 years, even if the profits are lower today, I can wager every business out there will go for profits for 100 years. Therefore, the focus has to be on driving prosperity of all. And the reason why we have the problem raised by our questionnaire, that males need to find a way of accepting, is because we as humans are hardwired to have egos. From the time we are born, we are being told us, you, I, a name. We automatically break away from the concept of oneness. Because we have to have ourselves to know what we are doing. And so even now that we are talking about male, female, gender issues, we are only reinforcing the ego element. And we have to flip the language. I talked about inclusion earlier. We have to flip the language to what is best for nation. That is our measure. And what is best for nation should acknowledge if a woman 99 out of 100 times is better placed to deliver for the nation, they should do it. Full stop. Not because they are females, not because they have been disadvantaged, but simply because they are best placed for tomorrow. And so policy-wise, we have to, I think, distinguish the issue of transition. Transition of, let's call it the sins of the past, where we are today, all the discrimination, the lack of opportunity, the suppression that has occurred, and we need to start to transition away from that. But ultimately, where we want to go is a state where there is no discrimination, there is no ego. All that matters is advancing the national cause. Then we reintegrate. That is where we need to be. So you need two types of policies. But first and foremost, everybody just simply need to sit and accept. There is no imprint that says, you're a man, you're a woman, only men can do business, only women can do nursing, only blah, blah, blah. No, that is a relic of the past. We have to let go of those things. Who is better able, better positioned to advance nation?
Thank you.
That's it.
Thank you, Dr. Leo.
Change the policy.
I have actually been given a very big red flag outside, and I've been told, I know there are many questions inside, but I've been told to take one question, but I see my boss, who's the minister, raising her hand. I'm not sure what I'm supposed to do. So the people outside, you really don't take precedence. Go ahead, Minister. The mic to Minister, please.
Thank you. I'm sorry, but I just felt that I needed to add my few cents to the comments. I want to commend Mr. President and the team for this initiative. I think it's very important for us. But when we think of the business ecosystem, I know we are focusing on innovative financing for women, but we are at the Southfield Lewis Community College. And when we sit here and look at the structure as a student of Southfield Lewis Community College, I was here as a student of secretarial science. And I remember sitting later on the board. We had a board where the private sector came in and advised us, and we sat down and advised the college as to the subjects to be taught. And we are here, but we're talking about business. And you're right in saying we need to look at what is good for our country as a nation. But then we have the technical group, we have welding, we have everything else, and then we have business over there. We have not linked them. So consequently, you have persons sitting and doing the theory and not the practical. So there, within this whole complex here, if we change how we present the subjects, the technical subjects, then you have businesses starting right here and growing. So again, that is one of the things I think. When you look around us in terms of general business ecosystem, and I see what transpired with somebody like myself, where I sat and I saw my mom and dad and the way they hustle, so I pick up that from them. But there was no encouragement in terms of documentation as to the success stories of our parents. So up to now, when you look at St. Lucia, when you see the progress that was made by old man J.Q. Charles, from selling bottles to becoming this huge business, nothing is documented. So we need to face our reality in terms of some of the things we need to do in addition to all the things that we've discussed. Also, when you look at just business ecosystem, what are some of the things that are still missing within our ecosystem to cause our businesses to grow? I can tell you the whole issue of research and development is not spoken about for us, and we need to speak about it and try to document it. Another one that is, when you look at our micro and small, from the ministry's point of view, there's no incubator, there's no hub for persons who want to get into business. They might have the knowledge, they do not have the complete infrastructure to meet the international standards. Yet, we have no infrastructure for this. So I'm saying, so as a country, Development Bank, Caribbean Development Bank, you need to help our government put some serious infrastructure and basic infrastructure in place, both technology and basic infrastructure. Another one is our basic shipping. We cannot ship anything from point A to point B. Up to now, as a region, we have gone backward instead of forward. So we have to look at the ecosystem, identify the gaps, and let us speak about a partnership that you spoke about for us to make it move. That's the
Thank you, Minister. And Dr. Leo, that comes to the point you spoke about of the education policy and so on. And just to reiterate, just to put a plug for the Minister here, that in terms of the incubator and those kinds of facilities that are really required for women who don't have access to funding, also, I am told I have one question I can take. So that last question, please, from the virtual audience.
Good morning, everyone. I am serving as an intermediary right now. The question is for you, Dr. Leo. Does CDB have targets for loans to impact women and women-owned businesses?
We don't have targets per se, but we mainstream gender lens investment in everything we try to do now. We, in fact, have a gender score on almost every project that we give to allow it. But it would not be appropriate to say you have a target of lending, because to get to a target, it means you have to be able to match demand and supply. if you think of a target as something that is desirable, that you want to work to, then I would say yes. We have been discussing the idea of ensuring that even in our own broad procurement, that we move towards increasing the percentage of procurement from women-based, gender-related elements as a goal to work towards. But we don't have a firm target goal that we say we have to meet 10% every year going forward. But surely something aspirational. At least we could be talking of an inclusion ratio that it has to have, or it has to show a particular mix going forward as opposed to specifically X in the gender space.
Thank you so much, Dr. Leo. And I'm on to the final approach, and thank you to our audience for the questions. I'm sure you could ask the panelists some questions after the session. Just the final remarks from everybody. Make it as short as you can and summarize, where we go through, and then I will allow Dr. Leo at the end to just summarize and reflect and give us the final wrap-up. Sandra?
Hi, okay, so, just in a nutshell, I just want to leave with you. I mean, I know we spoke a lot about working with women and access to finance, but I just want you all to ponder, and this is mainly for the women because it happens here actually. We tend not to support each other as much as we could. And it's very easy to say that, well, men don't do this, men don't do that, but we're actually our own worst enemy. So I want to challenge you to think about how different you can be and what positive influence can you do for somebody going forward. I mean, at the end of the day, I work in the bank, and I think that we have more women there than men, and we have a lot of women in very senior positions, and so we're very progressive in that organization. But it's not without, at some point in time, you have to fight. So don't fight against each other. Let's fight with each other for the same cause. That's my takeaway for you all.
Thank you, Sandra. Ashley?
So I think my word of encouragement to women would be, do not wait on the perfect scenario. As women, we tend to wait, I can wait until my children, I have to wait until I ready this particular age. When I already lose 10 pounds, I can look into that. And so you hear that a lot from women. Do not wait, because you're going to miss some opportunities along the way. Even if you do not get that opportunity today, you're still learning along the way, so you are ready when that opportunity hits. We would put programs out there, and a lot of women miss the opportunity because they were not preparing themselves along the way. And you always hear, oh boy, if I'd done that 5 years ago when I thought I should have done it. So that's my only encouragement to women. Do it now. Yeah.
Okay, well, my word is actually going to be to financial institution leaders. If you think that by being gender neutral, you are therefore avoiding this whole problematic and are being inclusive, well, you're failing. Because being gender neutral is a proof that you are impartial and unattentive to your client's needs and requirements and pain points. And therefore, you are 100% discriminatory. And therefore, if you really want to do something, really be inclusive, you have to have an intentional effort that goes into it. But just because you are inclusive doesn't mean you are exclusive. So in no way is your program or your effort supposed to alienate men and their ego. What it's supposed to do is make sure that and it's most of the time it's the processes that need to be reviewed and the policies that need to be reviewed, and not the products become 100% only for women. Once you really do all of that and you become more inclusive of the requirements and the challenges and understanding the life cycle of women, then you are going to have products that serve everyone and include women in the equation. Thank you.
Thank you so much. And thank you, all of the panelists. I just want to give the chance to our host, the president of the CDB, to really give us your final thoughts, your takeaways, and your reflection on the way forward.
Thank you, Sanita. I think we need to start from maybe a fundamental position that makes us in today's environment people. the right of everyone to an equal life. Now, we might not think this is so important to this discussion, but it is. Because if you recognize that, you will come away with one basic position, that every person in every country has the capacity, the capability to contribute to the betterment of that society. So the moment you start there, it is not about, is it this person or that person? But it becomes, how do we share as a people to grow? How do we share responsibilities? How do we share burden? And how do we share opportunities? Now, once we accept that, then everything else falls into place. And it falls into place to say we are to contribute to the growth of ourselves. And we'll do that by sharing, not by being against each other. There is neutral, exclusive. It is about the national purpose. Now, we get there, and I think once we accept that it's about the mindset change, without a mindset rewiring, we don't have a future. But the mindset will not change overnight. It will take time. And so we have to be persevering, we have to be repeating it and saying it at every opportunity by everybody, from the Prime Minister down through the ministers to leaders in society, in business, teachers, the religious community, parents, in the home community. Everybody has to be able to repeat that until it is now hardwired in our minds. Now, the moment we get there, I think for me it would have meant we would have anchored ourselves on where it is we want to go. Once we anchor ourselves on where we need to go, then it boils down to 3 elements that we need to implement. And we use that framework at the bank. What are the types of investments that are needed to help overcome the challenges that will get us to the objectives we have now agreement on? Second, and we can agree on all of those things, whether it's public, private, and all the things to be done. Second, how much will it cost? And how affordable is that? So where is that money going to come from? What types of instruments? How do we manage that with a lens to looking at return in a risk development framework? Bridging time today and the long run such that the goal of national development can be realized. And the third, implementation. Capacity to deliver. And we cannot leave that out. Now, whether it is in the TA side that you mentioned for the development bank, or broad-based reaching out, helping. We focus today on MSMEs, but it's on everybody, you know. MSMEs just become a little slice of the bigger problem. How do we drive that delivery, that implementation? And that takes money. It takes technical assistance, capacity building, education, management training, society responsibility training. All of that has to come together. So it is, how do we put those 3 elements at any one point in time in a way that says we are addressing all of them, if not at the same intensity, but a bit of all at different stages, so that at the end of the day, no party is left behind.
I don't think we could end on any better note than how we just ended, and I want to thank all of you, the panelists. Thank you, our in-house audience, and those virtually for joining us. And just for myself, the key takeaways, something that Dr. Leon mentioned, in terms of the education policy and moving forward, ensuring that our ecosystem for business generally works well together, and very importantly, development risk. Looking at that a little bit more than we have been doing, because like Dr. Leo said, what worked yesterday may not be what would work tomorrow. So I want to thank all of you. I'm sorry that I went a little bit over time, but thank you for the really engaging conversation, and have a good morning. Thank you.